Welcome to the Monocle Banking Podcast, proudly brought to you by Monocle Solutions. And we're on episode 96. Can you believe it? Honing in on 100 episodes. It feels like yesterday we were debuting episode 1. So it just showed you that there's real demand for insightful, in-depth banking and insurance content in South Africa, and especially in a world where a bank can double as your telco, your grocer, your AI-powered financial coach, your retail, your e-commerce. What does banking even mean anymore? Well, Nedbank has been quietly rewiring its consumer business with new products like Avo, Mobi Money, and PayShop integration, really reshaping how clients engage with the bank. And it's a great pleasure to have Mutsa Chironga, who's with me to unpack what the future of retail banking looks like in 2026 as an executive who's spearheading the retail division. Mucha, great to have you on the show. And I've got to start you off firstly with your knee injury. What happened?
Mike, I'm an avid jogger, and I was in the middle of a 10K one sunny Wednesday morning in Joburg, and I just lost focus of looking at the ground, and I hit something on the pavement, tripped over, and landed awkwardly. But I'm on the mend. I should be off crutches in a couple of weeks.
Joburg pavements can be hazardous.
Absolutely.
You'll be forgiven. So it wasn't chasing a robber down the road or anything exciting like that.
No, nothing as dramatic, no.
So is that your de-stress, jogging and getting out away from the world of and the cut and thrust of banking?
Absolutely. So it's funny, you really miss it. So I've not been able to jog since July. So I've been walking and cycling and other things, but jogging's off the cards. So I do miss it. Yeah.
Low impact things. What exactly, when you look at your love affair with retail banking and you look back to your early and your formative years, was it something that ran in the family? Did you always aspire to be in banking?
So I think it started really around a passion for creating large companies in Africa, or successful companies in Africa. Because at the time I was overseas in the US and I wanted to come back and be part of creating big companies. When I got here with McKinsey, I looked around the African continent and I was like, every country has a common denominator that it has large banks. So among the largest companies in all the African countries, Ghana, Kenya, Zambia, wherever you look. So I got drawn to banking and consulting, and the more I did it, the more I fell in love with especially the retail side, in terms of it's a good combination of customer insights, like people's real lives. Like how do people save and buy things that they kind of care about, or borrow to buy things they care about? It's a combination of macroeconomics, so what's happening with interest rates, what's happening with inflation, and I studied that at school. It's a combination of statistics and econometrics and all the modeling that comes with credit or next best action or whatever it is. And at the forefront often of technology. So whenever we talk about applications of digital or AI or robotics or, now cryptocurrency, banking is really in the forefront of many of these kind of leading edge technologies. So it's just a fascinating confluence of a lot of exciting things.
And I've always thought when you talk about technology, that because of that lifestyle element of banking, I engage with my banking app daily.
Yes.
Because you transact, you trade, you spend daily. And I've always thought banking is so uniquely positioned, more so than, say, insurance, to fully embrace and leverage the power of data and digital technology, because you had that daily interaction with your end user and your customer. Whereas if you're an insurer, for example, you might have it when you're on board and then maybe when you claim, but hopefully you're not claiming every day or there's something wrong with you. But so banking really is exciting from that perspective. Where exactly is Nedbank Consumer gaining share right now? Is it deposits, origination, digital engagement? Where do you still feel the competitive squeeze inside the business?
So we're very happy with where we are in digital, and we're above the South African average on the share of our sales that come from digital. So we've had a real kind of mobile first strategy, and that is paying dividends for us. 67% of our sales now on our app, which is very exciting for us.
Wow.
We are gaining market share on the lending side of our business. So when you think about vehicle loans, home loans, we're doing extremely well in those parts of our business. We are also now turning the corner on credit card and personal loans, also starting to see some green shoots of market share growth there. We're struggling a bit on deposits, and deposits, I think, is where there's been probably the most disruption of the sector from players like Capitec or some of the new digital entrants. So we're really sharpening our pencils to see how we can how we can compete effectively in that space.
Yeah, of course. I mean, the market has never been more crowded. You've got Time, you've got Discovery, Capitec, of course, perhaps soon Revolut coming to the South
Absolutely.
African
Yeah,
market, and all of them scaling very quickly. Which of the economic models or design philosophies do you most admire, and which simply wouldn't work inside Nedbank's governance or capital structure?
So I really like the model of Nubank, actually. They obviously invested in TymeBank, but not operating in South Africa.
Mm.
And I like the fact that they really kind of started with a credit card-led model. A credit card, I think, is one of these products that combines a lot about banking in one place,
Yeah.
right? So it gives clients a transacting capability, gives clients a lending capability. You can earn rewards with it. So they started there. And with a purely digital model, really completely disrupted the Brazilian banking landscape, scaled there, moved on to Colombia and Mexico. So I really am excited by that. But I think with digital banks in general, I think there's a couple of things that are very exciting and interesting from a competitive perspective. One is when I looked at the banks in South Africa, the average cost per client of a digital bank was a quarter of the universal kind of brick and mortar banks. Okay. So, I mean, that's a lot of cost advantage to have. And you can do a lot with that cost advantage. You can give your clients free bank accounts like TymeBank does. You can give your clients lots of rewards like other players do. The other piece I saw was, we were very happy as Nedbank that we improved our net promoter score to the 60s. We're at 68 now. And we were basically number one of the top 5 banks last year. But what's happened is the digital banks, TymeBank and Discovery, are now playing in the 70s on Net Promoter. So the client experience there is being rated better by clients than what we achieve in the universal banks. So these two things, the cost and the client experience benefits, I think create a fundamental challenge that we need to respond to as some of the incumbents in the market. But I think with Nedbank being the smallest of the incumbents, I think we're in exactly the best place to respond and be a challenger and be disruptive ourselves.
And I also think, I was chatting to Paul Morley, the digital journey that the bank has been on, one of the first movers really to move into the cloud. Not everything. So, there's obviously still core systems that run on COBOL that are on-prem, but there's a lot in the cloud. And that allows you to be maybe a little more agile and nimble and innovative when you're designing new products. Would you say that's been a kind of core foundational pillar of being able to, say, compete with these new digital first and digital native type banks?
Yeah, so I mean, we've been delighted with the progress on our core banking implementation, which among implementations has been one of the faster, one of the lower cost of core banking implementations in South Africa.
Yeah.
And what it's enabled us to do, we've now moved about half of our transactional clients, about 3 million of them now, onto the new core banking platform on 3 very simple products called the MyGoals transactional product range. And we're able to build those products much more easily than we're able to build products before. The pricing has also we've been able to be much more nimble and agile on how we adapt pricing and keep the pricing nice and simple. Core banking has come with real-time transaction processing for us, which has a lot of customer experience benefits in terms of clients see their balances on their app in real time as opposed to waiting for the overnight batch to run. But also in terms of things like collections capability. So we're able to collect that vehicle loan installment in real time when that money hits the account versus, by batch overnight.
Mm.
So quite a lot of real-time processing benefits coming through, as well as product design and pricing flexibility benefits that we're enjoying.
Coming back to the cost to serve as well, and I mean the acquisition cost I was just amazed when we had Kun Juncker of TymeBank on a panel a couple of years ago at the Beyond Banking conference at Gibbs, and I mean the numbers he was saying in terms of cost of acquisition were, as you say, a quarter if not less than what the traditional banks. But if you look at the cost to serve, Capitec I think still keeps the lowest cost to serve in the game.
Yes.
Your CTI has fallen. What's the next structural lever for you? Is it automation, platform modernization, branch repurposing to help close that gap?
Yeah. So we have, I think, 2 opportunities. One is on the revenue side. So you spoke about you're on the app every day, which is a fantastic advantage. And we are really exploring the convergence of different ecosystems or sectors around the banking app. So we've recently launched Nedbank Connect, which is our telco service for our clients. And that was in September. And we've seen quite a nice take-up even in these few months. And the revenue from that is already quite exciting. We're getting many more postpaid clients than we expected in our business case. So we think that has got the potential to scale and be a nice new source of revenue. We are becoming a destination of choice for people's insurance needs. So that's another kind of new area of revenue growth that we're looking at. And so, and the other area that's really growing quite nicely for us is VAS, including PaySharp and, prepaids and all those Lotto, all those types of VAS solutions. So we're enjoying some very nice revenue growth opportunities, even as there's trends in the other direction, compressing transactional fees. We feel like we're overcoming them by capturing those opportunities. On the cost side, it's all the usual stuff. So you've got to get your branches productive. So you've got to get people using digital. You've got to get the time to serve. The time standard's a bit more compressed. We've taken a lot of floor space out of our branches, made more of our branches smaller. We've taken a lot of staff-assisted transactions out of the branches in terms of, cash from tellers is now almost like 90% plus done on ATMs. And then in the rest of our business, how do we automate even more in the back end? So we've done a lot of automation of onboarding, servicing, but there's still, several hundred kind of people who are doing quite mundane operational tasks. And the more we automate those, the more we take costs out. So there's still, I think, a lot of opportunities we have to optimize our cost model.
Lots of runway there, which I think is super exciting as well. And just if you look back at the old bank assurance model was, very much flavor of the month in the 90s and then kind of faded away a little bit. Would you say we're going to now see a resurgence of that? And I think you're not the only bank. We've seen, I think, FNB alter its rewards to try and funnel more people into its insurance products, for example.
Yes.
But now, because of the engagement factor with that app, the time is now right for a renewed push in a bank assurance direction.
Absolutely. So we're in such a privileged position. I think we're so convenient for people to use.
Yeah.
So as people come into the app every day, we can offer them funeral cover, simple life cover, legal cover, gap cover, all sorts of insurances very conveniently from a place where they're coming every single day. And we can also probably manage persistency or the rate at which you collect the premium better than an insurance company because we're seeing the salary. So we can actually, collect the premium at the time where the salary hits the account. We can also tailor our products to what we see in the transactional behavior of that client. So we can say, okay, we could see you're paying outsurance this much. We can offer you the same product for less, or, we can also see things about your credit behavior and say, what does that tell us about how we can sharpen our pencil on the premium on the insurance product? And there's great synergy between the two products, by the way, because if you can cover the asset, so we do a lot of vehicle funding. So if you can cover the vehicle, that actually reduces your credit risk, allows you to reduce the credit pricing. So there's all sorts of synergies between insurance and banking, which we're enjoying exploring and capturing for our clients.
And home loans and mortgages as well. If you're originating the bond, you can provide the home loan insurance.
Absolutely.
When you look at the Avo Super app, I was really amazed. I first started using it a couple of years ago, and there was a Black Friday, and looking at how competitive the pricing was. And I think Avo was really early to the kind of super app game.
Yes.
Where are the monthly active users sitting now, and how does Avo generate value beyond payments? Is it through the marketplace? Is it through utilities? Maybe just share a little bit more about that Avo journey as well.
Yes. So Avo was another foray we started into beyond banking. We launched in 2020, just as COVID was arriving on our shores. Avo launched. So it was fortuitous timing in terms of that was a time people now needed, remote shopping more than ever. So as it's evolved, what we've really pivoted the business towards is, number one, it is the redemption shop for our rewards. So we offer our clients discounts on flights. We offer our clients discounts on Apple devices. We've got some of the best prices for Apple devices in the market. We've got a special agreement with Apple. And so clients fulfill those rewards on the app. And we're seeing something like 35% year-on-year growth in redemption of those rewards, which shows the levels of engagement we're seeing there. Yeah. And we're going to continue to add other redemption items on there for the purposes of rewards and keep on enhancing those offers on the reward side. Then we said, what are our strengths? So our strengths are really vehicle finance and home loan finance. And so we've started to offer clients the opportunity to not only sell their cars, but to get financing for their cars on the Avo platform. We've also started to offer solar solutions or home associated solutions, solar, water solutions, tanks, etc.,
Yeah.
around that. So creating a bit of a home ecosystem. And in both those cases, we've seen, fantastic value of sales growth of items in those ecosystems, again, in the kind of 40s, 50s% year on year. In terms of your question on active users, so we've ended up at about 2.9 people logged on to Avo ever. Okay, so that's the people that's joined in. And it's quite exciting because a lot of those were non-Nedbank clients. And now we've created a point of relationship with clients that were not at Nedbank.
I was going to ask you, because, as you said, initially it was for rewarding existing clients, but so you are seeing a lot of non-Nedbank clients.
Absolutely. So we're now engaging people who knew nothing about Nedbank, didn't have a pre-existing relationship with Nedbank. The active users are now at about 70,000 per month. Okay, it peaked at about 140 last year. And the reason it's come down year on year is we've removed the grocery capability from Avo because we were finding that the economics and the service levels weren't at the level that we needed. So we kind of removed that functionality. But we're still very happy with the 70-odd thousand active users that we have a year. And we're very happy with it as contributing to our home loans proposition, our vehicle loans proposition, and our core rewards proposition.
Right. So, and that's pretty much where you see it going in the future.
We want it to be a support to our banking business and to our banking clients. So that's how we see it. Right. So we don't want to, we're not trying to create a Temu or a, take a lot, because that is a very well competed space and with, long tails to getting positive returns. But we're trying to meet all the needs of our banking clients in a fantastic client experience and with fantastic prices and fantastic turnaround times.
Yeah, no, exactly. And know where your strengths are. I mean, if you're going to go and compete with those e-commerce last mile players, as you say, very competitive. And on the groceries, 60-60, I think, has really shown us how it's done. When you look at payments and PayShop and real-time payments, we know are exploding. What are you seeing in terms of engagement in your retail base with PayShop? Because initially, I think the market was quite excited about this new development, very much pushed by the Reserve Bank as well to try and lower the costs and get more people using digital off cash. I think Nedbank was one of the few banks that offered it for free up to a certain level. There were lots of quibbles about the costs, because ultimately you want this to be broad-based.
Yes.
But someone's got to pay for it. So what kind of engagement are you seeing with PayShop? And what are your thoughts about how we grow it from here as a kind of banking ecosystem and not just Nedbank?
So PayShop, I think, is hugely exciting for the industry as we start to replace cash and digitize cash and make payments more secure and more convenient for more South Africans, and also bring more granular data into the banking ecosystem of how clients are actually behaving. Because cash transactions, you can't actually see what people are buying or who they're sending them to. So I think it's got many benefits: security, convenience, data richness. As a bank, we are also just amazed with the take-up of PayShop. I think it's exceeded what we thought in our business cases. We're seeing growth rates of around 200% year on year.
Wow.
On PayShop volumes, PayShop revenues. And so much so that we're finding that for the first time this year, if we look at our transactional fee income, the fee income we earn from digital payments has exceeded the revenue we earn from cash payments for the first time in Nedbank's history. That happened this year.
Wow.
So we're really seeing the real takeoff of digital payments enabled by PayShop. I think clients love the real-time aspect of it. They love the convenience. They love the surety that their money's gotten to wherever they're trying to get it to.
So it's not cannibalizing your card economics?
No. So we're not seeing that. If anything, we're seeing that it's doing what it was supposed to do, which is displace cash with a more convenient, more secure. Right. So the growth rates of cash, I think, have now more or less plateaued in our business from a volume and revenue perspective. But the digital side has taken off in a way that is more than compensating for that, which is exactly what we were hoping for.
And the exciting thing, as you say, it's data rich.
Absolutely.
So, I think for the entire industry and ecosystem, from a financial inclusion perspective, if you can understand the transactional data and history of an individual client, you can then lend to them. You can design products for them. You can turn those so-called thin file into thicker file clients and customers, which is great for financial inclusion.
It's exactly right. So that's where financial inclusion is really going now. So say we have, I think it's somewhere around 20 odd million credit active South Africans. There's so many that are not credit active that would value the ability to take out a small loan to buy their kids' school shoes or whatever it is that they need to take care of.
Yeah.
And we now have just unimaginable sources of data, whether it's transactional, whether it's grocery data. So the grocery companies are coming to the party and making their data available for credit scoring. The telco companies are coming to the party and making their data available for credit scoring. And we already had pretty strong bureaus in South Africa. So one of the major projects we're working on now is actually a credit initiative to try and reach deeper into the small loan size, like lower income part of the market than we've been able to. And because of digital and because of credit scoring, we're now able to justify the economics of it in a way we weren't able to 5 years ago. So the space is really opening up, and we really hope that it does, in a country with such high unemployment, it does really create opportunities for South Africans to access credit for whatever purpose makes their lives better.
Yeah, and be it a bridging loan, a working capital, even an SME level, I'm sure there huge opportunities. And as you say, it's not just payments, banks, retailers, telcos, all kind of colliding head on. But
yes.
Interesting that they're sharing their data with you, some of the retailers, because we've seen the ShopRite Money account. We've got FNB Connect gaining traction. Where do you see Nedbank with its MVNO connectivity partnership? Where do you see that opportunity, and how does that feed data and loyalty back into your consumer engine?
I think if we are able to, in your banking app, because you can see what's happening with your Nedbank Connect account, how many minutes of airtime you still have, how much data you have or haven't used. If we can make it a more convenient one-stop shop for seeing not only your financial affairs, but also your telco affairs, be able to book flights, buy Apple devices, all from the app, be able to buy insurance, see all your insurance policies, manage your financial wellness on the app, you really start to see the richness of what Nedbank Money app becomes in people's lives, And similarly with other banking apps, not just Nedbank, but that's really the possibility. And then you start to think, okay, once you get beyond your social media and maybe, I don't know which other kinds of apps, but banking apps are probably then up there in terms of the apps that people find get most utility from. So that's really the opportunity for us with Telco. We're not doing it because we're trying to, necessarily become the world's biggest telco, but we're trying to help our clients consolidate their lives in this banking app and find convenience and find value. And we're also able to offer, really market-leading prices. We're offering a gigabyte for 30 Rand, which is incredible. Wow. Precisely because we're not necessarily trying to make abnormal profits. We're just trying to give our customers a good mobile and voice service conveniently from the banking app.
Yeah, because it's that broader value proposition that increases customer stickiness and loyalty, and that is much more valuable to the bank in the long term than an incremental margin on data prices, for example. We're hearing the big buzzword artificial intelligence all over the place.
Yes.
Let's talk about that and data. Do you have any AI-driven use cases that you could share with us that you're using on the consumer side?
Yeah, no. So AI has been alive and well in our business for some time. In terms of one of the places we're excited about is our chatbot NB, which has now, I think, seen 60% year-on-year growth in usage. And clients who make requests of MB, like ask for a statement or check up on a payment or ask, what their balance is, we're finding that 70% of those queries are completed in the chatbot without having to then be referred to a human being to conclude the query. It's really a convenient kind of query resolution space for clients, and they can download documents and all that sort of stuff. So that's an exciting use. I think we're starting to explore agentic AI and see how we can actually have richer conversations than maybe the more basic kind of queries. And then we've, for a long time, had AI use cases in sales. About probably 8-9% of our sales now come from Next Best Action, which is a very personalized AI-driven machine that says, Michael, we see that you travel a lot, so we've got a credit card that has particularly good travel insurance and particularly good discounts on flights, and we position that credit card in that way. And that is now 8 to 9% of our sales and growing with each year. Credit is another environment where, there's some patterns that logistic regression is good for, but there's some modeling that is better done through machine learning, random forest. And so we've probably now got 15% out of all our credit origination done by machine learning models. So we've had many applications of AI for us for some time.
On that point, and on credit origination, especially when it comes to decisioning, how important is it to have explainability of the model and the black box sometimes, because you're such a regulated entity as a bank, you've got to be able to say, well, this is the reason we took this decision. Have you been fairly cautious in rolling that out because of some of those constraints that still hamper that use case?
So you do have to be careful, and we think about this a lot in our credit governance and our model governance. We say whatever models we come up with, we've got to be able to explain it. So we actually end up using AI a lot in feature development. So say you've got a pool of transactional data, but you don't know if it's several features could be relevant. It could be like, what day of the month does your salary run out? Could be a relevant feature.
Yeah.
How many days after your salary does your salary run out? Another feature could be, how many times in a year do you go overdrawn? That tells you something else about creditworthiness. Another feature could be, does the balance stay above a certain level? That tells you something else about creditworthiness. So we often use AI to derive the features. Once we find the feature, we can then put it in a model, and that is quite explainable. So you can say we use this feature because it tells you that a client has good cash flow, and that's a pretty explainable thing to put in a credit model. Yeah.
It's fascinating because I had Danny Saxenberg at Emerge say to me that he designed through machine learning an algorithm that could predict, according to the day and time of the week that you applied for a home loan, your likelihood of default.
Yes.
And he couldn't quite explain it though, because if you applied on a Tuesday at a particular time, your default rate would be high. I mean, common sense and logic said, but why? Because but what you're describing is absolutely rational on the other side of it.
Yes.
It does remind me that I think Jeff Bezos has referred to AI not as an invention, but a discovery, because it is like a scientific discovery. We're still learning how a lot of this stuff works, but it is fascinating. When you look at your credit competitiveness, I mean, you've targeted ROE is greater than COE by this year.
Yeah.
How is AI improving scorecards and limit management and affordability models to make credit both fairer and faster?
Yeah. So I think the name of the game in our mind is for good quality customers, to be able to approve more of those.
Yeah.
So say we have an approval rate of X for good quality customers. If you can get that to X plus 1%, X plus 2%, that is kind of what really helps your ROE in the long run, is if you can attract better clients. And once you've been able to approve them, then you can also be more generous with pricing, more generous with term, because you know that this is probably going to be a good quality risk. And AI obviously helps you to discern those good quality from less good quality clients in particular pockets that you're trying to grow. So that's absolutely something that our value analytics and credit teams can focus on continually.
Yeah.
And then I think in terms of speed, we also are always trying to find automated ways to ingest income and expenses data. So from our own transactional data, from the DEA banks that share transactional data with each other, and increasingly from other data sources, the more we can use AI to really try and understand. So even with grocery spend, you can start to say, if somebody is spending 6,000 Rand a month at Checkers, their income is probably X. They're probably not going to do that without a certain level of affordability. So all those things help you get more automated ways of trying to figure out what is somebody's ability to pay, and start to test that affordability is actually there, and then over time implement that into production in your models to make your credit faster and more convenient for clients.
And that's a great use case for it, because you're dealing with such vast quantities of data. I mean, that's absolutely designed for this kind of, high compute, high output type data modeling. Now, just as we look at, you mentioned speed. I think speed and trust maybe sit kind of uncomfortably together, because on the one hand, you want to be quick. On the other hand, you've got to do things in a trusted manner. We've just got off the FATF grey list. There's a lot of attention being paid to all the regulatory stuff, anti-money laundering, all of that. And now you've got PayShop and instant credit transfers, and that's kind of these new risks that introduces. So how are you handling that? What are your biggest fraud vectors that you look at today? And are you using AI in this space as well to say, right, this is another use case where we can really get ahead of any potential red flags when you're doing things in real time?
Yeah, no, it's obviously a huge area of focus. Digital fraud in the industry is up in very high double digits, unfortunately. And it's always a race where as soon as you feel you've solved one problem, another attack vector shows up somewhere else. So we absolutely use AI in fraud prevention. We actually are successful in preventing about 40 times the amount of fraud that actually ends up happening. So if we have X fraud per year, 40X of that, which is an incredible number if you think about it.
Yeah.
And we try to minimize in that 40x false positives, because the worst thing is to, flag a perfectly innocent customer for fraud. So that does happen. You do get some false positives, but we try and minimize that. So again, AI is super helpful. But we are humble and know that this race is not won, and it's probably going to be with us indefinitely, that we're really going to have to be applying our best data science, our best algorithms, our best minds to preventing both what we know is already happening, but also the unknown unknowns. Like you don't know it's coming, anything that looks unusual.
Those Rumsfeld black swans. And it frightens me as someone who works in broadcasting and radio. There was a Canadian radio station that cloned the library of its presenters' voices through AI and then fed it into a large language model and basically automated the station for 24 hours with these DJs forward and backing. It wasn't talk radio, it was just forward and back announcing, but the audience were none the wiser. Now, I mean, imagine that in the hands of bad actors who are trying to then socially engineer information out of you to log into your account or do something that they shouldn't be doing. So, it's a space that I'm sure keeps a lot of bankers up at night at the moment, Mucha.
No, I mean, exactly, because the industry thought it had made a big step forward with voice biometrics as a security mechanism. But now you can imitate someone's voice in like 10 seconds of hearing their voice. So that security vector, its value is materially diminished. So it is concerning. And the worst thing is, I mean, if you listen to a client who's just lost their money, and, it's the most heartbreaking thing. It really breaks your heart to listen to some of the cases. I pick up the phone and talk to them because they're just so distraught, So it really is something that we pursue with a lot of passion, a lot of vigor to try and protect our clients. And often, unfortunately, the fraudsters often prey on people maybe who are more elderly, who may be, less familiar with all the things that happen in the digital world.
Yeah.
So no, it's a real, almost like an industry-wide and societal issue we've got to apply our best minds to.
Yeah, and there are many digitally vulnerable kind of consumers out there as well, as you say. Just as we wrap up and you look into 2026, I don't know where this year has gone, but if you were to swing big for the fences and say, there's going to be a big move that'll define Nedbank consumer next year. Is there one that you would kind of swing for and kind of stick your neck out on?
So, Mike, I can't tell you all our secrets. I can tell you we're very interested in sector convergence. Okay, both in terms of what it means for the value we can give to our customers, what it means for the data we can assemble to be sharper at insights around our clients, and what it means for distribution possibilities. So we already distribute through Boxer, one of the fastest growing retailers. We have 200 Boxer outlets that we sell current accounts, credit cards, personal loans in.
Okay.
And we're, continually curious about where else could we meet our clients in their various journeys of their lives. So the cross-sector piece is something very interesting for us. And we are applying a lot of thought to the disruption caused by digital entrants, including the three that you mentioned, Time, Discovery, and Revolut. So we're applying a lot of thought to that. And what does that mean for us?
Yeah.
And we look at these things as both challenge and opportunity. That within every challenge, there's an opportunity, and we're trying to crystallize what that opportunity is for us. And we're excited about where we're going.
And it's a very exciting time to be a consumer, because all of this means that Nedbank, like many other banks in the market, are looking at how they can offer me, the end user, you, the end user, more value, better rewards, different partnerships that really help meet you where you are as a consumer. So we might be seeing, who knows, Nedbank in your car dealership or in the software of your favorite vehicle, wherever Mutsa's hinting at these partnerships in future. Well, that's a wrap for the Monocle Banking Podcast. Mucha, thank you very much. Mutsa Chironga, Managing Executive for Consumer Banking at Nedbank. Great pleasure having you here at the Monocle HQ, sharing your insights into the consumer journey here on the Monocle Banking Podcast. Take care.
Thank you so much, Mike. My pleasure. It's been great to be with you.
Well, that's a wrap for this week. We have number 97 coming out next week with Professor David Bach. We're going to be looking forward to that one, talking about the world of geopolitical fracturing and what that means for financial services and executives thinking about these things and the opportunities as well as the threats, as Mutsa said. Well, if you enjoyed this conversation, remember to like and subscribe and follow us for more deep dives into the forces shaping the future of finance, powered by Monocle Solutions.